In today's video, I want to talk to you about how I blew my trading account. That's right, this isn't going to be one of those trading videos where I talk about all of my wins and all of the fantastic things that I've done in my trading career. No, today I'm going to talk about how I basically lost my entire trading account in the space of literally 30 minutes. And also some of the lessons that I learned from it and how it shaped me and how it enabled me to go on with my trading career and really achieve some of the success that I did. Because I don't think without those early failures, I would have been able to go on and do what I did in my trading career. So that's what we're going to talk about in this video here. But before we get into it, please make sure that you are subscribed to the channel. So if you aren't already subscribed, and many of you are not, so you probably see these videos pop up on your news feed or something like that, but you won't actually be subscribed to the channel. So hit that subscribe button and then hit the bell so that you get a notification as and when I release a new video. Okay. So let's talk about the time when I blew my trading account and the lessons that I learned from doing it. And to be more accurate, it wasn't just myself, my brother and I, it was a team effort, and we actually blew the account together. And as I said, we did it in the space of about 30 minutes. And what it was we're going back to the time of 2005. So we were literally at the beginning of our trading careers. And we were trading the FX markets, and we'd found a strategy, okay, for essentially straddling news releases. So what would happen is you would get something like the non-farm payrolls or an interest rate announcement. And typically in those days, it doesn't happen as much these days, but back in those days, so nearly sort of 20 years ago now, what would happen was that the markets would go very, very quiet on the day of the release. And you would literally see the currency markets in a range of about, 10 to 20 pips. And then leading up to the announcement, that range got even narrower. It would be within sort of like a 5 to 10 pip range. And then as soon as the announcement came out, the markets would literally just skyrocket in one direction. Very, very rarely did it sort of go in one direction and then go in the other direction. Pretty much 99 times out of 100, what would happen is the news release would come out. Obviously, there was a little bit of research into, the expectation of the numbers and the sort of like from what the expected is to what the actual number is. But, that's we'll talk about that in a different video, the actual strategy that went behind it. But essentially, what would happen is that you would have a buy order and a sell order just above the market and just below the market. And when the announcement came out, the markets would literally go in one direction very, very quickly. And you would make, 100 pips in the space of a few minutes, sometimes 5 or 10 minutes, but literally, most of the time within a few minutes, you'd make, 50, 100, 150 pips. And that's how easy it was. All you had to do was turn up before the news announcement. If it was a non-farm payrolls, it'd be the first Friday of the month. If it was an interest rate announcement, it would be a different day, and you could literally trade anything at the time. You could trade the ISM, you could trade housing numbers. But the point was that economic data, what would happen on the day is that the markets didn't really move at all, and then they would move a long way in a very, very short space of time. So our strategy was straddling the market, and this was, this worked a charm. We were very, very early on in our trading career, so we didn't even really know what the non-farm payrolls was, to be honest with you. We just knew that there was this secret announcement that came out on the first Friday of every month, and it just moved the markets, hundreds and hundreds of pips. And it was some sort of mystery. No one really knew what it was, which when I look at it with the benefit of hindsight, obviously we just weren't nearly educated enough to be playing with the markets. But that's one of the things to do with trading, isn't it? You don't really need a lot of money or a lot of knowledge rather, to make a lot of money, right? That's one of the sort of like the draws of the market. It's sort of like a blessing and a curse. So anybody can go on and put on a trade and make money. And by the same token, you can have the best analysis in the world. You can put on a trade and lose money. That's just kind of the way trading works out. But we weren't nearly educated enough at the time. And essentially we were basically riding our luck. And what happened was that there was one particular announcement, it was the non-farm payrolls, where the headline number, and there are two numbers, or there's a few numbers that come out at this time, but there were two numbers primarily that we were looking at. One was the headline number, and the other was the revision from the previous month. And what happened was like the headline number was I can't remember if it was positive or negative, but essentially, one number was really positive and the other number was really negative. So what happened was that the market shot off in one direction, and then the revision came out, and then it shot off in the other direction. And what happened was that we got taken into the market in one particular position, then the market went in the other position, in the other direction, and the other entry got taken. So now we're sort of nursing. So the first entry that went in is now seriously out of the money. So I thought, the best thing to do right now is let's react. And I closed the trade. So I closed that quickly. And at that particular moment in time, it was okay because, the profitable trade sort of outweighed the negative trade, the trade that was in a loss. But then what happens, the market then went in the opposite direction. And when it went in the opposite direction, then I had to close the other trade for a big loss. Now, some of you are sitting there thinking, well, okay, so you took 2 losses in your trade. That shouldn't really have wiped out your account. The problem is that we were seriously over leveraged. So leading up to that particular moment in time, we'd been trading for maybe 4 or 5 months doing the same strategy for news releases. And we'd taken, a small modest account, so it's like 500, £1,000 into, tens of thousands of pounds. So we were literally, we would put £500, start with £500 on the first release. And after that first release, they closed. We then finish up with about £3,000 or £4,000. We then turn that £3,000 or £4,000 into 15, and then 15 into 20 and 30, and so on and so forth. And essentially, we got to the point where we thought we were invincible. We had a pretty large account from doing next to nothing, just sort of arbing the market. Essentially, and we were over leveraged. So we just thought we couldn't lose, and we put so much money on that particular trade, and we ended up, I say we blew the account, but we ended up more or less back at square one. So by the time we closed all of the trades, you had £300 or £400 left in the account, and that was up from before that particular announcement. The account was sort of like £30,000, £40,000. So we managed to absolutely decimate that account in a matter of minutes. And at the beginning, I said it was 30 minutes, but that's taking into account waiting for the economic announcement, setting up all of the orders. But once the market was in and out, it literally was a few minutes, and we were just sat there just like, what the hell had just happened there? But the good thing is that taught us a massive lesson in terms of risk management and actually wanting to get a little bit educated in the market, because we saw that there was potential in the market, okay? Just from what we were able to achieve with literally no knowledge whatsoever leading up to that point. The way that we were able to build our account up was insane. And I'm not saying that anybody's going to be able to repeat that today. We can't repeat that today because, not only did we learn that we need to learn more about the markets, but we also found that actually we need to pay a lot more attention to our risk. So you can't sit there and take 5, 10, 20% risk on any one particular trade. You need to be very conservative and just focus on building your account up slowly. So yes, I know gains of 1 or 2% a trade are not very sexy when you're just starting out and you've got a small account. But you have to focus on the longer game. Okay, you got to look at the longer term and think, yes, there might be 1 or 2 of you out there watching this out of like the hundreds of thousands or millions of people that will eventually watch this video. There might be 1 or 2 of you that will be able to do that. But the vast majority of you will end up losing your money by trying to take 500, £1,000 and turn it into £100,000, £1 million or whatever. You put yourself in a much better position to be able to make money if you take a conservative attitude to risk. So instead of saying, I need to make a monetary amount, focus on percentage gains. If you can just start, all right, start today and make very, very modest, let's say 0.5%, 1% or 2% gains per week. All right, so not per day, not per hour, per week, and sometimes it might even be per month. But let's just say that you start off with a target of around 1% per week. All right, that's still 52% a year. So you're sort of like, you make 50% in a year just by trading that conservatively. And yes, if you're trading with a small account, then that's not going to translate into an awful lot. But what it will do is it will teach you the skill of trading. And that skill of trading is something that you can parlay into something else, into a bigger career. So even if you don't have the capital to be able to put behind yourself to make a 50% return in a year seem, attractive or appealing, you will be able to raise money. You'll be able to go and get funded or join a prop desk or whatever, as long as you've got a strategy. So you can go to someone and you can show show them that you can manage risk and you can make modest gains. That truly is the holy grail when it comes to trading. So it's not about, taking your trading and taking a £500 account and, 100xing it in the space of 3 months or 4 months or even a year. You're just not going to do that. But if you can accept that by making modest gains and learning the actual skill of trading, it might take you 6 months, it might take you a year, it might take you 2 years, but anything worth doing is going to take time, right? Traders are among the highest paid, professionals in the world. So why wouldn't it take you time to learn that skill? If you wanted to become a lawyer, you would have to go to university. You'd have to learn the skill. If you wanted to be a nurse, you would have to go and learn the skill. It would take time. All right, so trading is no different, but I promise you the rewards are very much worth it. You just have to have a responsible attitude to the way that you're approaching your trading, and I promise you, in the long run, you will be able to do it. So coming back to how it helped us and, from blowing our account, obviously, like I said, it gave us a responsible attitude to risk. Okay, so then we didn't focus on just trying to, treble our account every time we took a trade. We focused on trying to make modest gains, slowly but surely, week by week, month by month, year by year. And I've just said to you that you can parlay that into something else. And that's exactly what we did. So we were able to take that skill, to take our track record, okay, and then go and establish a private investor fund from that, okay, where we were able to trade on behalf of other people. All right, and that's a completely different stress altogether. And we'll talk about that on a different video. So I'll talk to you about some of the wins and losses there. That was a very, very exciting ride. It's not something we do anymore because it was super stressful. But again, that's something that I can talk to you guys all about in a different video. If you feel like you want to hear that story, if you want to have some advice on how you can go about doing that, please post a comment beneath the video and I'll be happy enough to create a video on it for you. But essentially, the proof is in the pudding, and it isn't hard to raise money. Once we got to that particular point where we could prove that we had a track record, a verifiable track record, people are more than happy to give you money to trade on their behalf. And you don't even have to have astronomical returns. If you can even prove 20, 30% a year, you'll be an absolute superstar and people will want to invest in you. So please invest in yourself, invest in the process of learning a particular approach. It doesn't matter what approach it is, any approach, as long as you've got a responsible attitude to risk, you can show small but modest gains, okay? And consistent gains rather. And you're always managing your downsides. You're never putting yourself in a position where you're going to blow your entire account the way that we did, trying to chase those lottery ticket wins. Okay? So with that being said, I hope you enjoyed this video. If you want to hear more stories like this, then please, as I said, post a comment beneath the video there. If you haven't subscribed to the channel, please hit that subscribe button, then hit the bell so that you get a notification. I've enjoyed talking to you about this today. I like talking about these topics, so I hope to be creating more videos on this. Otherwise, I'll say thank you so much for watching and I will catch you in the next video. Take care now.